Hi and Assalamualaikum to all my friends and to Madam FAKILAH ANURUL. My name is Zurin Nadira Binti Mohamad Munadi and my matrix number is 23 DIB19F1052. So today in this video, our group we would like to talk about the summarize of the journal from Dr. Seyed Nezamuddin, which is Risk Management and Challenge in Islamic Bank.
Hi, my name is Nurul Asyikin Binti AB Rahman and my number matric is 23 DIB19F1058.
Assalamualaikum, my name is Nurina Adriana Binti Mohamad Hairi. My matric number is 23 DIB19F1028.
Assalamualaikum, my name is Adriana Binti Zainol Azlan and my matrix number is 23 DIB90F1006.
So first of all is about introduction. So the nature of specific risks facing Islamic bank together with the virtually unlimited number of risks available to them to provide funds through the use of combination of the permissible Islamic mode of financing, PLS and non-PLS, raise a host of issues in risk measurement, income recognition and adequacy of collaterals. Next, innovative solution and inappropriate adoption of available risk management are needed to reflect the special characteristic of Islamic financial product and services.
Specific risks surrounding of Islamic bank. Firstly, we have PLS. PLS stands for Profit and Loss Sharing. PLS approaches entail determining profit and loss sharing ratio for investment project in various sectors of the economy, as well as regular audits of finance project. We have two PLS mode, which is PLS mode and non-PLS mode of financing. For PLS mode, we have Mudarabah contract, Musyarakah and direct investment.
Operational risks may arise from various sources. First is the unique activity that Islamic bank must perform. Second, the non-standardized nature of some Islamic product. Third is the lack of an efficient and reliable Sharia legislation system to enforce financial contract. Okay, next is non-PLS mode of financing also carries special risks that need to be recognized. Specifically, Salam contract expose Islamic bank to both credit and commodity price risks. This is because bank agreed to buy the commodity on a future date against current payment and also hold the commodity until it can be converted to a cash. Similar risk is also involved in Ijara listing because this contract do not provide Islamic bank with the ability to transfer substantial risk and reward to the lessee, and lease asset must be carried on the balance sheet of bank for the term of lease. This factor coupled with asymmetric information resulting from the unrestricted PLS and non-PLS contract where banks manage deposit of people at their own discretion. This increases the potential of moral hazard and creates an incentive for risk taking and for operating Islamic financial institutions without adequate capital.
So I would like to explain about general risk surrounding. Okay, number one, central bank pay little or no interest on this reserve. This has had a severe impact on their profitability. Okay, number two, central bank have limited access to lender of last resort (LOLR) resources. And number three, there are also more general considerations that make the operation of Islamic bank riskier and less profitable than traditional bank. And lastly, Islamic bank has been forced to hold a larger proportion of their asset in reserve account with central bank or in correspondent account than conventional bank.
Next is reducing special risks of Islamic bank, adequate capital and loss, offsetting reserve as well as appropriate control of risk are key elements to ensure a sound operation of Islamic banks. These factors may be reduce the potential of moral hazard in the PLS mode. It is essential for bankers to have adequate amount of their own capital at risk. Mudarabah, adequate capital and reserve provide depositor with a psychological reassurance to help maintain their confidence against possible loss on the performance of individual banks. Increasing the ability of banks to attract more demand deposit which are not remunerated on the part of bank. This deposit may share the same risk as investment deposit.
Capital adequacy. Capital adequacy is measured according to the volume of risk asset. In principle, the bulk of the asset of Islamic bank should be made of PLS mode, which are mostly uncollateralized. These assets carry more risk than those made from non-PLS mode, which in principle are collateralized. Thus, the ratio of riskiest asset to total asset should typically be higher in an Islamic framework than in conventional bank. Capital adequacy norm in an Islamic framework should therefore more emphasized. It should be noted that in practice, PLS mode are a small fraction of Islamic bank total asset. Aggregate data indicate that Mudarabah and Musyarakah asset account for about 25% of the operation of Islamic bank in the asset side. The majority of the asset side of Islamic bank are made up of non-PLS mode, notability markup transaction. Thus, it must be reasonable to conclude that the assessment of capital adequacy for Islamic banks should be based not only on a thorough evaluation of the degree of risk of each bank portfolio, but also an assessment of the mix of PLS and non-PLS asset.
Next is asset. Islamic banking system asset represented by Mudarabah contract cannot be classified until the underlying contract expire. Until that time, there is no default or mismanagement on the part of agent. As noted previously, default of PLS transactions mean that the investment project failed to deliver what was expected, that is, a lower profit or a loss. Therefore, it will be appropriate to take a practical control to monitor carefully the PLS assets that are estimated to yield a lower or no profit before the expiration of the contract. Next is management, evaluated according to technical ability, leadership, administrative capability, ability to plan and respond to changing circumstances, and also willingness to serve the legitimate need of the community, complexity of many Islamic banks' operation, monitoring of investment project, managing the asset at time, legal uncertainties relating to the Sharia litigation system, control of risk and validation of contract play a vital role in the effective management of operational risk.
So I would like to explain about earnings. Okay, earnings are linked to a bank ability to cover losses and supply appropriate capital, as well as earning trends. If earnings are sufficient to cover losses and accumulate capital for the bank expansion, they are deemed of excellent quality. And if an Islamic bank had used its own resources to fund the loss of specific project, for example through musyarakah, losses would first result in a depreciation of the value of deposit and the bank equity position. These two concerns are also relevant for Islamic banks. Okay, next, liquidity. Okay, liquidity may be legitimate to assume that Islamic bank liquidity adequacy should be improved in order to build a proper, broader systemic liquidity arrangement humidity. Number two, Islamic banks have fewer options for obtaining cash through LOLR facility than traditional bank. And Islamic bank, on the other hand, have a duty to demand depositor, whereas conventional bank have a duty to all depositor. And lastly, deposit volatility, the ability of asset that can be converted into cash and access to the money market, including interbank or other sources of cash as central bank lender of last resort facility are all used to determine liquidity.
Sensitivity to market risk. Firstly is the adaptation to changes in market pricing such as interest rate, currency rates, commodity prices and equity value is characteristic of market risk sensitivity. Secondly, in Islamic bank, due to Sharia prohibition on interest rate risk only impacts Islamic bank that indirectly through the markup pricing of delayed sale and lease-based transaction. Currently, the traditional bank has more risk hedging options than Islamic bank. This is due to the risk hedging contracts such as swap, option, and futures contracts are not available to Islamic bank.
Next is suitable clear information strategy. In the Islamic banking system, depositors have more incentive to monitor bank operation than traditional bank. Because in Islamic bank, return to depositor depends on the performance of the bank. The advantages of such a system are this system helps depositor to choose a specific bank in which they can allocate their funds according to its performance. A clear information system Islamic bank assist depositor with regard to diversification of their portfolio. Disclosure provide information on the main risk factors associated with the investment portfolio.
Next is good governance and internal controls which reduce mismanagement and also brings market confidence for banks. Okay, next is providing data for depositor for the expected rate of return, which is an important consideration of the public. And the last is providing information on the education and professional background of the bank staff and management.
In conclusion, we can conclude that to overcome the risk in Islamic bank, the bank need to overcome these issues such as capital adequacy, asset management, earnings, liquidity, and sensitivity to market risk.